Peter, always good to have you. I'll start right there on Powell and the Fed. Tighter talk, tougher talk on inflation, which is what we've been hearing from Powell lately. What's your expectation about what happens next year on interest rates and inflation?
Well, remember, the art of central banking is to make sure you talk tough and then adjust to the situation as it evolves. So I think that's exactly what the Fed is doing. Bigger concern is the ECB. I think they are frankly overreacting. The 75 basis point increase today was probably too much. And Europe, I think, in the face of a pretty severe energy and food crisis, has a lot of worry ahead of it. And the ECB seems not to be taking that fully into account.
But, that's interesting. Don't they have to, though, do it to sort of match and keep up with what everybody else is doing with the euro already below 99 to the dollar?
Yeah, but the size of the economic distress that Europe is likely to face as we go through the winter really suggests a little bit more caution. Most of the inflation problem in Europe involves food and energy. It's not things that are really susceptible to monetary policy. That is a somewhat different situation here in the United States. And so, again, I think the ECB is sort of falling back into an old way of thinking and not recognizing that the inflation that they're facing is largely of a different nature than historical periods of high inflation in Europe before.
I think Christine Lagarde wanted to believe that for a long time, and then they just kept seeing inflation rates skyrocket and everybody else doing 75 basis point hike. So, Peter, what does it mean ultimately for Europe? What's the prognosis there? And what are you guys doing at Lazard in terms of business there with all of these forces hitting at once?
Well, the macro situation, again, I think particularly in Germany, where the hard stop on Russian natural gas is a significant shock. And then combined with the fact that you've got a climate-driven crisis on water and very low levels on the Rhine and other rivers means that it's very hard even to ship coal and do the other things that you would do to help substitute away from the Russian natural gas. So for now, in terms of deal making, I think Europe, the micro story is actually still quite active and optimistic, but the macro story, I think, is pretty dire, and that brings us back to both monetary and fiscal policy.
Do you think that the U.S. is also facing recession?
There is a path here. Look, the Fed, let's just be clear, if the Fed wants to or needs to create a recession in order to disinflate sufficiently, that's what will happen. It is within the Fed's power to throw the U.S. economy into recession. Whether that is necessary or not depends on the course of the next several inflation reads. And there are some very positive signs. So in particular, the supply chain problems that caused not all, but at least a significant part of the inflation to date, those seem to be easing with freight rates coming down, availability of semiconductor chips dramatically higher, and gas prices also coming down, even though that's not a central focus of the Fed's attention. So there's at least a pathway here where the U.S. can avoid recession while still accomplishing the reduction in inflation that the Fed wants to see.